Hello, everybody. Gwingalatunji here. So, last but not the least subject on this internal analysis matter is value chain. So, value chain or value chain analysis. So, when we are talking about value, what are we talking about? Value, value, value. We must have been hearing value, 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 value. Even in tax, which nobody can run away from for life. It's one of the things that is the most commonest in this world, tax. So we have value added tax. So that shows us that if there's nothing like value, they will not be taxing it. So what is value? So value we can look at it as something or the contribution that we've added to things. Like we usually, our slogan in Indigenous Association is value to life, value to business. The contribution, what are we contributed to what? Contributed to life, contributed to another product, contributed in form of services. What particular thing we've added, that is the value. And when we begin to segment what we are doing, and we bring a particular thing to another level of goodness, we say we've added value. Value is provided by attributes of the product or services. Customers are willing to pay more to obtain goods and services because of the benefits they received. So when we added more benefit to a particular thing or goodness to a particular thing, then we are adding value. Let's take for example, you buy something for 1,000 naira, that's in Nigeria, or $1,000. Then you use it to produce another thing. This usage and the output, that is the value you've created. Let's say at the end of the day, you sell that thing for 10,000 naira or $10,000. So you've created 9,000 difference, and that 9,000 difference is the value you've added. And when we are incorporating or taxing, is that amount of the value you've created actually that should be taxed. But many people, when they are filing, they don't really know how to do the computation for VAT, value added tax, and the like. Is the value that you've added that is taxing, because that is what you've produced actually, not that 1,000 that was your input. Is that value, and not that 10,000. That value that you've created is what should be taxed, and we call it value added tax. So that is value, and the sequence at which you've produced from that input of 1,000 naira products that you use, all those activities in their sequences are what we call value chain. Value chain, that is, they follow one another. So when we are not talking about value chain analysis, we are talking about evaluation of those sequence of events and activities that eventually become your output or output product or services. So that is value chain analysis, when you begin to evaluate all those activities to see at this juncture, what are we done, what value are we added, and how can we quantify it. You will say you are evaluating your value chain, and that is value chain analysis. In a competitive market, almost all markets are competitive, the most successful business entity, and you will agree with me, are those that successfully are creating more values. Like Porter said, if a firm is pursuing cost leadership, that is, they want to produce at a cheaper price, then they are aiming at creating same value with competitors, because the quality may not be that too good, but they want to ensure that, okay, their aim is to produce at the cheapest price. But if an organization just want to differentiate themselves and have a branding that is unique, that is another value they are creating, and they may have upper hand in that industry and even have higher prices, and people and customers will be ready to pay for it, because is the price goes after the value. Value now may be real value or perceived value. It may be real in the sense that, okay, it's tangible, it could be touched, it could be felt. Those are real value. But also it could be perceived in form of, oh, this maker, they are the they have dominance in the industry. So that is perceived value, that is brand. We are going after the brand name. So those are values, but they may be real and they may just be perceived. That a brand name has a larger household name does not mean eventually that they have better products. It's only perceived. They may not, but that's as an example of perceived value. So the concept of value chain now, I had discussed it, but let me quickly look at our notes. A value chain is a series of activity, each of which add value. Like I said before, the total value added by the entity is the sum of the value created by each stage along the value chain. Okay? JS, that is Johnson and Schools, they define value chain as the activities within and around an organization which together create a product or rendering of services. So now we can have types of value that we are creating. We can have the primary value chain and we can have the secondary value chain. We can have the primary value chain, we can have the secondary value chain. So when we are talking about having primary value chain, we are talking about those aspects of our business or businesses that actually lead to the eventual output that we are having. So those primary value chain activities are real activities. They are tangible, direct input into that product or service we are rendering. So let's look at this diagram now, this simple illustration. This, yes, okay. So we could see the primary value chain, the inbound logistics. The inbound logistics, we have to buy our input. It is directly going into that product. We have to do the manufacturing. We have to produce, we have to mix and the like, and those are operational activities and they go directly into that product too. So buying the input, using the input, mixing it, breaking it down into components and using it to form another thing, they are direct activities and they are primary for the output to come out. Outbound logistics too After we've produced, we must put it out. We must store it. We must let it go out. So the marketing too go directly into the product we are making. The sales goes directly into what we are making, because until a product reaches the final consumer, we can't say we've completed the series of value chain or activity. It is until the product is consumed that's okay, or at least get to the hand of the customers, then we can say, okay, we've done a business. So marketing, sales, and maybe servicing those products, especially those products that have maybe some agreement that, okay, we have to service it for them quarterly and the like. All those activities, they go directly into the primary value chain analysis of our products. So inbound logistics, operations, outbound logistics, marketing and sales, then servicing the products in the hand of the final consumer. They are direct primary value chain activities. So what are secondary value chain activities? Basically, they are, in recent days, they call them back office. They are back office activities like HR, human resources management is important, but they are secondary to the value we are adding. IT, our data and the like, computerization and the like, unless that is the service we're actually rendering, then it becomes primary. If not, if we are using it to enhance what we are doing, then it's a secondary activity. So it becomes secondary value chain activity. So those are some of the secondary value chain activities that we could have. They are actually more. Anything that is not directly into the product is secondary, and everything that is directly into the product is primary. But secondary value chain, we are not saying that they don't add value. They add value too, but must be looked in that format, that we have the primary value chain, we have the secondary value chain. So the two value chains are critical to strategic management. While they are both important, how we manage the different activities are of utmost importance. So for strategic management, the managers must be able to answer some questions as it relates to the value chain analysis or activities of the organization, like who is the customer? We've dealt actually with this, but it's coming up again. Who is the customer, or who are customers? What feature of the products or services do they value? We must know what our customers need. We can't say it enough. We must know our customers need. How do we provide the value to our customer? Because we must tailor what we are doing or the services we are rendering to their need. If not, we are going to buy it ourselves. How can we add the value that the customers are looking for? How can we add value more successfully than our competitors? So we must be able to answer all these questions and many more for us to have a success story in value chain analysis. Methods of adding value. There are a lot of methods in adding value. Like if we make a brand and we have a brand name that is so solid, household name, That is a value. Don't forget we said some values can be real and tangible. Some could be perceived. So brand name could be a perceived value, but it's an added value nevertheless. So another way we can add value is nearness to our customer. When our customers can easily buy from us, closeness, like we call it grassroots. We will have grassroots operations. We are closer to our customer. They don't need to go a mile before they can buy from us. Or maybe we have also delivery as a system, delivery system. We have a very good and quick, swift delivery system. That is another value that we are adding. If our services are reliable, they know that anytime they need this thing, they will get it. It's available from us. That is value. A lot of ways we can create value. It is also important to recognize that value is added by all the activity on the primary value chain. I've stressed this and we could not stress it enough. Know that the secondary value chain is not important, but the real value comes from the primary value chain. So now, as we are rounding up, for exam purposes, if questions should come as regards internal analysis, especially around value chain, how should we answer it? Generally on internal analysis and value chain, like the value chain analysis we've been talking about, it has focused on customer, how to add value to customer. But equally, value could be created and added to some other people internally within the organization. Like when we are talking about corporate strategy, the essence is to add value to our customer, like we've been discussing. It's customer focus, it's competitiveness. And when we are talking about financial strategy, that one is to create wealth maximization and value for the shareholders. That's financial strategy. Then we are talking about investment strategy, plowing back into the organization. So it's to create value for the future of the organization. Then we'll be talking about going concern and the like. So how should we answer as we are rounding up in our exams? Please, if you are yet to subscribe, go and subscribe to our channel. Click the notification button, click subscription button, like button, and comment. Engage us. How should we answer in our exams? The value chain model can be used to make a strategic assessment, especially when it comes to organizational performance. Each part, that is the primary and the value chain, secondary value chain activity, must be analyzed. We must dissect them into pieces in the scenario that the exam will create. And what must we be looking out for in the exam, especially for the part A, the compulsory part of our question? We must be asking some of these questions. How is value added by this part of the value chain? How can we say this function has contributed to this end product? Is then we'll be able to advise the management as it relates to that question. Has this entity in particular been successful in adding value in this part of the value chain, whether primary or secondary? Must be able to pinpoint it. Has the entity been more successful than its competitor? So all those scenarios will be in our question, but we must be able to dissect it, asking all these questions. Are we more successful in adding value to our competitors? Because if we are not, then the going concern is not sure. Then we should be recommending the ways of doing better and enhancing the value chain of the question. Has there been a failure to adding value successfully in the organization? And if we observe that there are various failures in the examples cited in our question paper, so we need to propose solution, recommend maybe disciplinary action and the like, and how to make things better. These are some of the things we must be looking for. Does the entity have core competence? Because if there is no competence, first of all, there couldn't be any strategic capability like we've studied. So we must look for, do they really have core competence? And are they harnessing the core competencies that they have to become strategic capability? So these are some of the questions that must be asked when we are answering the question. So all these and many more are things that must come to our mind. So far we've studied the strategic capability in this internal analysis. We had examined competitive advantage that an organization could have when we harness our core competence or core competencies. We had looked at who a customer is and how to know our customers' need and how to meet our customers' need. We had studied critical success factors and key performance indicators and how they relate with one another. We had taken a look at the 6 steps approach to using critical success factors as proposed by Johnson and Schools. We had studied competitive benchmarking or competitors benchmarking. We had looked at value chain analysis, adding value, what value is, the types of value, the primary and the secondary value chain. We had looked at corporate knowledge. We had looked at techniques that we can use to maximize resources, how we can do value chain profiling or value chain audit, capability profiling, how we can use SWOT analysis, and VIRO framework. All these have been looked at in details, and we shall now continue in the next video on competitive advantage. So we see discussing competitive advantage next time.